In 2021, it was raining IPOs in India. Many startups went public to open a range of opportunities for investors. Zomato's IPO is known to have been oversubscribed 38 times before closing on July 16, 2021. If you plan to invest in the upcoming IPOs this year, stay tuned until the very end of this video. It's time to know the top 5 things you should keep in mind. Hi everyone, I am Prarthana from Clear and let's get started. An initial public offering or an IPO is when a private company sells its shares to the public. An IPO indicates that a company's ownership is changing from private to public. As a result, the IPO process is often known as becoming public. The draft red herring prospectus or DRHP is filed with SEBI and a document that includes critical information about the firm such as its businesses, historical performance, its financial position, why and what it intends to do with the IPO proceeds, and potential risk factors that could actually affect the company's performances and thus share prices in the future. You should not skip reading it thoroughly before deciding to invest. You should always ask why the company wants to raise capital. If the answer is to pay off existing debts, then you should be cautious of such companies. But if the capital will be used for both debt repayment and expansion, you can consider investing in it. If the company already has a profitable growth chart and good cash balance, it can be an attractive investment opportunity. Investors should also look in the company's valuations as the offer price may be low or overvalued depending on the industries in which it operates and the financial parameters. You must decide whether you intend to invest in the IPO just for trading reasons or the day of listing, or whether you intend to hold the share for the longer period. The reason for distinction is that trading strategies are based on current market conditions, whereas long-term strategies are based on the company's fundamentals. You should also look at the company's competitors. The DRHP includes peer comparisons based on both financials and values. You can use comparative values to determine whether the company's valuations are in line with its peers. So, folks, I hope you have enough clarity on the factors you must consider while investing in an IPO. For queries related to business or finance, you can contact our experts by clicking on the chat link provided in the description box below. Also, please don't forget to subscribe to our channel for more such informative videos and stay tuned for more updates. Take care. Thank you so much for watching this video and see you soon in the next one.